Welcome back to the Global Business Report here on Arise News. I'm Idia ICN coming to you this morning from Nigeria's commercial capital, Lagos. Shares in Asian suppliers and assemblers for Apple Inc. fell today due to profit warnings that point to weakness in iPhone sales. Taiwan-based assembler Honhai Precision Industry Co. Limited dropped more than 30%, and rival Pegatron Corp fell more than 5%. Both companies count Apple as one of their major customers. Apple warned earlier this month that holiday sales would miss Wall Street expectations due to weakness in emerging markets, including India, and foreign exchange costs. Apple shares sank by 5% on Monday, dragging down U.S. markets and wiping more than $40 billion off the tech giant's market value. The fall followed a profit warning from some of the firm's suppliers, which exacerbated concerns that demand for iPhones is slowing. Apple's share price fall came after Lumentum, a U.S. manufacturer of facial recognition technology, and Apple supplier, said one of its major customers had reduced its shipments. The declines made the company one of the biggest losers on the Dow, which closed down 2.3%. The warnings from Apple suppliers extended a slide in Apple shares that started earlier this month after the firm's sales forecast disappointed investors. We crossed to Singapore for the latest from Arise Asia business correspondent Melanie Ralph. Hi, Melanie. So, taking a quick health check on the markets first, and it's not looking great this Tuesday. What's weighing on sentiment, Melanie?
Yes, that's right. I see it red across the board here in Singapore. It's financials that took the biggest tumble, with tech stocks adding to the pain. The benchmark down by over 0.5%, continuing its fall from yesterday's session. Investors remaining risk off in the face of fears about slowing global trade and investment. A quick look at Japan and the Nikkei 225 falling out of bed over 3%. Tech stocks slipping after the US counterparts were hit by Apple, as you were just saying. Tokyo Electrons, Screen Holdings and Advantes all down between 3 and 5% so far today. Hong Kong's Hang Seng was down but bounced into positive territory for afternoon trade. The same with China mainland shares, with the Shanghai Composite rebounding to over 1%. Meanwhile, a dismal picture for shares down under. The ASX 200 off by nearly 2% this session. Tech and healthcare shares the biggest losers, followed closely by mining and financials. Westpac in the headlines after an Australian court refused to approve a record $25 million fine by a corporate regulator for using inappropriate calculations to determine if customers could afford home loans. Now, the judge said the regulator had failed to prove the bank's wrongdoing and had not demonstrated how it had calculated the fine. Westpac shares tumbling over 5% today, thanks to a weaker overall market and after trading ex-dividend.
Well, Melanie, let's delve deeper into the Aussie banking system because it's been in the spotlight for a while now. How significant is this latest judgment against Westpac?
Well, Australia's banks have been getting some very bad press for a while now. Without a doubt, the Westpac ruling has thrown another element into the spotlight, and that's the effectiveness of Australia's financial regulators. The pressure is now on the Australian Securities and Investment Commission, or the ASIC, to show it can rein in the industry. Now, this all comes on the back of a wider investigation into the banks called the Royal Commission by the government into banking misconduct. Now, the ASIC has already brought lawsuits against all four countries' big four lenders alleging rate rigging. Westpac was the only one of the four to defend the case, and it was cleared in May, but was found to have committed misconduct. Westpac was vindicated over its choice to defend itself after the Australian court fined it $2.4 million, which was far less than the $41 million sought by the ASIC. The other three banks, Commonwealth Bank of Australia, Australia and New Zealand Bank and National Australia Bank, all agreed to settle before the matter went to hearings and pay fines totalling $90 million. So there's certainly many moving parts to this saga, and Australia's finance industry has suffered not just reputationally but financially too, with some $43 billion wiped from the market capitalisation of Australia's four largest banks and wealth manager AMP since the Royal Commission was announced.
Well, Melanie, yes, a lot of controversy surrounding those banks now, but overall the markets are looking very bearish at the moment. What other elements are making investors sit on the sidelines this session?
Well, certainly energy-related stocks are taking a tumble after oil prices fell by more than 1% today. Brent crude sliding below $70 per barrel. This, of course, coming off the back of investors worrying about oversupply of the black gold after US President Donald Trump put pressure on OPEC not to cut supply in a bid to prop up the market. The fall also came as the US dollar hovered near 16-month highs, making oil imports more expensive for any country using other currencies at home. Another element still weighing on markets is, of course, the China-US trade war worries. However, the bounce we saw in the Chinese markets today was thanks to reports that China's top trade negotiator was preparing to visit the United States ahead of a meeting between the two countries' leaders. Now, the South China Morning Post reported, citing sources from both sides, that Liu He may visit Washington to prepare for talks between Trump and China's Xi Jinping on the sidelines of the G20 summit in Argentina later this month. And then, of course, we can't ignore Brexit. Of course, fears that Britain could crash out of the European Union without a Brexit deal is denting investor confidence, as is a growing rift over Italy's budget, both factors hitting the euro and the pound. So it's certainly not a market for the faint-hearted at the moment.
Well, Melanie, you also mentioned that tech stocks are dampening the mood for Asian markets today. So what's the outlook for tech giants going forward?
Yeah, the tech sector is getting a battering today after, as I said, you mentioned earlier in the show, Apple fell following poor forecasts earlier this month. Analysts and investors are voicing concerns over the state of Apple's business, contributing to growing worries that iPhone sales were stagnating and could hurt suppliers. Shares in Asian suppliers and assemblers for the brand slid after several component makers warned of weaker than expected results, leading some market watchers to call the peak for iPhone in several key markets, actually. But it's not just Apple that's souring the mood. Until last year, China's tech industry had enjoyed years of breakneck growth. Firms including Alibaba and Tencent almost doubled in value in 2017 alone, making big-ticket investments as part of a multi-billion-dollar expansion into cloud, offline retail and finance. But now the market is feeling the pinch. Hiring numbers are down, company margins are thinner, and tumbling technology stocks have wiped nearly $500 billion this year from the value of China's top listed tech firms. Now, the biggest names in tech have flagged concerns, including Alibaba and Baidu, who revised down their full year sales forecasts in recent weeks on the weaker outlook. Several factors are hurting China's tech players, including a broader economic slowdown, a slide in the currency against the dollar. Domestic markets are down sharply. Also, the US has accused China of stealing technology, barring tech acquisitions by Chinese firms and blacklisting others. There's also pressure coming from the Chinese government with tech companies, from social media to gaming and fintech, having to deal with tightening regulation and a heavier hand from the ruling Communist Party. So there's a lot of factors at play here that's dampening mood there.
Thanks, Melanie. But lastly, Singapore is hosting its 33rd ASEAN meeting right now. What are the main themes that the delegates are going to be discussing?
Well, the opening ceremony was very much all smiles and handshakes, but there's also changing dynamics, and there's a lot at stake economically and politically, of course. Regional powers such as China, Japan and India will try to seek more support for open trade. And Russian President Vladimir Putin is in Singapore for the first time as ASEAN looks to Moscow for arms purchases and diplomatic protection. But all eyes will be on the regional comprehensive economic partnership, or the RCEP. The free trade deal will encompass more than a third of the world's GDP. Chinese Premier Li Keqiang, meanwhile, is expected to appeal for the need to work with the US on resolving trade disputes. It's not clear if he'll meet with the US Vice President Mike Pence on the sidelines, but whether the world's two largest economies can find ways to work together is going to impact everyone at the summit. China has been ASEAN's top trading partner for 8 years in a row, and a worsening trade war could hurt exports, which is vital to ASEAN's economy. There'll be also discussions on smart city and cybersecurity, but economic integration seems to be a top priority for many at this meeting.
Melanie, thank you so much for joining me today. It's always a pleasure speaking with you and hearing from that side of the world. You're watching the Global Business Report here on Arise News. It's time now for another short break.